Hey, welcome back to the channel. As I mentioned yesterday, today's portfolio update is going to be a bit of a beefier one because I need to update you on last week's performance and dividends as well as this week's performance and dividends. And yeah, given that my video last week got struck down by YouTube, as I mentioned. So yeah, unfortunately, that was considered harmful and dangerous content somehow. But anyways, I'll be going over the portfolio updates and also any news. There was a lot of news over the last 2 weeks that affected my portfolio. So yeah, and just how I'm kind of weathering that and adjusting or not my strategy based on it. So yeah, before we get started, as usual, we'll just kind of go over this a recap of the strategy for anyone that's new or for anyone that needs a refresher. So this is the monthly flow that I use to basically fully live out of my Robinhood brokerage account and investing 100% of my paycheck. I don't use a traditional bank account anymore. This is basically what I use. My paycheck rolls in to my Robinhood spending account. I transfer that full amount, 10.8K, to my Robinhood taxable brokerage account. And yeah, I basically invested in two major buckets. So 4K of that goes to growth and dividend growth stocks and ETFs. So things like QQQM, SCHD, single stock tickers like Apple, Microsoft, Costco. And yeah, any quarterly dividends that come from those just drip and just keep compounding. And yeah, this is basically the capital appreciation of my portfolios. This is what's going to provide my growth. So I'm just going to ideally never sell any of these. And then yeah, if ever I do have to sell, it's more for rebalancing between funds or single stock tickers to back to ETFs or something, not necessarily to actually take out money. And on the other side of the portfolio, that's where my income comes from. So I get a good part of growth and then a good part of income. And that's where I invested in high yield income ETFs such as XPAY, YMAX, ULTY, now WPay that I added as of last week. And between all of those, that gives me roughly 50% blended yield between all those funds because there's some higher yielding ones, some lower yielding ones like XPAY. And that's providing me a snowballing monthly dividend that's growing a lot. So anywhere between $200 and $300 a month, depending on what I invest in that month. And that's hopefully the idea with that is to keep growing my dividend. Right now, it's at like roughly 5K and grow that past my monthly expenses right now, which is kind of going high anywhere between 7 and 9K. And to hopefully eclipse that and then eventually be exceeding that and paying down my margin more heavily or not potentially. So yeah, any of those dividends that get deposited down to the account, that just pays down the margin balance to kind of keep things in check. Because the main thing that I do here is that like I'm basically building out this big asset pool. And then what I'm doing is borrowing against the value of those assets on margin. So I borrow at a 5% interest rate, which is like a lot lower than my mortgage, which is like at 5.95%. I wish I could refinance my mortgage at 5%. So roughly right now, that's about $500 a month that I'm paying in interest for about a 50-60% yield. So that's some great arbitrage there, like 55% spread essentially. So I take out all that money for my monthly expenses. So roughly right now, it's like, yes, like I said, $7,000 to $9,000 a month. So really net, what comes out of the portfolio after that is $5,000 dividends gets deposited, then 9K comes out. Really 4K gets added to the margin balance month after month. So yeah, that's what pays my bills and monthly expenses. And then hopefully the idea is to like rinse and repeat this until 40 years old and reach FI even earlier than I was initially planning. Because initially I was aiming for 45, but I'm trying to see if I could maybe bring that in 5 years and hit 40 instead. So yeah, that's the monthly process. And also like if you want a deeper dive on this, there is a video that I've gone through and I'll link it above there. So feel free to check it out. And also one thing I did want to mention as well too, yes, for anyone that likes to jump around in videos, I spend some time to actually like mark out all the different chapters. If ever you want to jump to specific spots, just always check my description and you can jump around there too. Worth mentioning. And yeah, as usual, just a disclaimer, none of this is financial advice. I'm not a financial advisor. I'm just some guy on YouTube. This is really just for entertainment purposes for you to see whether I make this with this crazy strategy or not. Do your own research. It's a very high risk strategy that I'm running given the margin. So yeah, as far as the portfolio update, let's just dive right in. So if we stop over to my investment sheet here, the top line numbers. So if we pop over here, so the full market value of all my portfolio right now, so between all the tickers, that amounts to 267.9K right now. If you factor out the margin, so yeah, if I minus out the margin, then the equity value and the net value after margin is 134.3K. With that, if I factor into total returns, that's like a gain right now of 58.4K or 43% if you factor in the margin. So yeah, I kind of show both values here, right? So this line's based on the market value, and then this is with on the net margin value essentially. So like what you'll see on Robinhood is typically like this, and then also this on Snowball, right? So yeah, I just kind of calculate both just to kind of get a good idea of like what it would be like on margin or not. So yeah, if I factor in total returns with all dividends and whatnot, I'm actually at like a 43.48% gain. And then if I just count unrealized gain losses, I'm at a 7.03% gain across the portfolio. So as you can see here, right? So my total return column obviously is mostly very green, which is nice. So even with the high yield stuff, if you factor in the dividends that come in, for most of these, I'm in the green. So like MSTY is one outlier that's in the red. WPay is slightly in the red here, but I literally just invested in this. And the rest of it is in the green. So XPAY is in the green, NVDY is in the green, HOOY's in the green, YMAX, ULTY, BTCI. Some of these like BTC and like XPAY and such, they have some carryover from previous funds this was invested in, but yeah, still in the green, even with the, if you factor those out. And then, yeah, and if you take out the total returns, then this stuff is in the red. But yeah, you always have to see the full picture in my mind when you're looking at the high yield stuff. So yeah, that's the top line numbers right now. If we pop over here, so right now the split between my growth and income funds, so 148K of that 267K is in growth. So in Apple, Microsoft, Reddit, Costco, Google, SEHD, QQM, and such. So yeah, most of the portfolio is in growth, right? So that's 55% of my portfolio. And then there's income, which is at 119.6K right now. So yeah, this 119.6K is essentially providing me with all this income here. So like roughly this, I did the median of the dividends year to date. So this is what I'm estimating, 5.6K. I think it's maybe a little bit high, but I still need to look at that formula a little bit more. Not 100% happy with that, but just to give me a rough idea, anytime I add more to some of these funds, like I can see that number update. So like, for example, when I added WPay to this week, like I saw this kind of went up by like $200 roughly, right? If I calculated like the 65% average dividend WPay has paid in its first month. So yeah, so really like that 119K is basically providing me with roughly 56.27% yield. If you count the full portfolio, then the yield is actually like 25.96. But like, yeah, just calculating off the actual money that's invested into just the high yield stuff, it's a pretty great yield. So yeah, given the mix of funds that I'm invested in between XPAY, WPay, ULTY, and all that, like, yeah, it keeps it like relatively high. And so right now also it's worth mentioning too that I'm kind of pushing on these higher yield ones, but eventually I'll probably start investing in some of the safer yield ones. So things like maybe like SPY, QQQI, TSPY or TDAC or something, just so those could have like good NAV stability, but also provide like decent income at like anywhere between 12 and 15%. So right now I'm just kind of trying to get it boosted with these higher yield ones. And then eventually I'll probably invest into safer ones in months down the line. But yeah, I want to hit a couple of income targets before I kind of reach that point. So, and then, yeah, if we calculated my salary right now, my portfolio is actually making $32.25 an hour. So higher than minimum wage for Washington where I'm at. So that's nice. But this is still the target. This is my currently hourly salary target. So I want to exceed this and double this ideally, really. And yeah, as far as the margin numbers here, so yeah, my margin maintenance right now, like once you factor in like basically my blended yield of like 25.37%, right? So yeah, I have like all my margin maintenance numbers here. So you basically times that on the market value of like these guys, and then that gives you your maintenance numbers essentially here. And this is the overall number when you sum all of these. And yeah, so that's basically the number my portfolio would have to drop to for me to trigger a margin call, right? So if I checked my buffer against my full portfolio value, so against the market value here, 267K, my buffer is actually 24.79%, which is, yeah, pretty solid overall. Like, yeah, for there to be a market crash of like nearly 25% in a day, that'd be crazy. Hasn't happened in a while. It has happened in like extended periods of time, like COVID was like 30% in a month or whatnot, right? So in that month time, I think I can kind of gather some funds to kind of fix up the margin balance and things like that, or sell some stuff to pay stuff down in cases like that. But yeah, given the amplification of the margin though, right? And this is the number that you see on Robinhood typically because they go off the net portfolio value. My margin buffer is 49.42%. So roughly like, yeah, about double what this is given my margin, because given that my equity is at like 50% right now, a little over. So yeah, but at the end of the day, this is the number I'm looking out for. So if this market value of the main portfolio drops this much, that will be the equivalent of a 49% drop, right? So that's why you got to be careful with like the amplification of margin can work for you on the upside and also the downside. So yeah, so 66.4K margin buffer overall. So pretty healthy, even given after the tariff dips, and we'll look at that at Robinhood in a second here. So that's giving me like a 39.4K buying power, and then also like roughly 19.7K of cash available for withdrawal. So yeah, that's the numbers. We pop over to Robinhood. So yeah, on Friday at close, actually ended up the day green, which was nice. So all my dividends came in from ULTY, YMAX, NVDY, MSTY. So now that stuff is weekly. That's all coming in every week, which is nice. The only thing practically that I don't have weekly right now is XPAY and BTCI, right? XPAY and yeah, these are the only two that are not weekly anymore. So yeah, so Friday was nice and green, but on the week it was overall down. And then obviously, like if we go over the month, yeah, the big tariff dip here that happened, right? And then yeah, it just kept dipping this week. Wasn't great. So yeah, it was interesting for the tariff dip just because like what's it called? Here, like when the dip was happening, I was almost wanting to kind of transfer over some money from my HELOC temporarily, given that the paycheck was coming up a couple of days later, and just invest in the dip. But had I done that morning, it would have been roughly at this point here at 9 a.m., which I or 9 a.m., which I typically invest in. And I ended up doing it. But yeah, and also like why bring the HELOC rather than just taking from my buying power is like I just wanted to like not erode my margin buffer so much, especially in a downtrend time. So what happened was that I ended up waiting. So my paycheck came in on the 15th, and this is when I invested. So really like it kind of evened out. I still invested in the dip because like I would have roughly invested around this time, which would have been almost the same point here. So in the end, still invested in the dip. And really that's the main thing I'd also want to convey through this dip is that like, yeah, over the years, I've just kind of built up my stomach for like, honestly, like I almost kind of get more excited about red days and green days because the way I see it is that I can buy even more stocks for cheaper, which is nice. So you get more value for your money, whether you're investing in like the high yield dividends or in the growth stuff. So yeah, those stocks that you buy on those days are going to just grow like crazy, right? So yeah, on those days, I'm just honestly really excited to invest. So that's why I was excited for the paycheck to come in last week or this week to invest. And that's exactly what I did. So that's how it's looking on the month. So now I'm actually negative on the month here. On the 3 months, yeah, I'm up 6% or 7.6K. And year to date, I'm up 14K or 11.6%. So doing pretty well overall. If we check against VOO here, yeah, so VOO was up 0.56. It was positive during that week. It's up 0.27 on the month, up 5.7% on the 3 months. So I'm like at 6%, and then year to date 12.8. So who's slightly beating me here? And yeah, year to date I don't have the full thing because I transferred to Robinhood back in July. But yeah, if we go to Snowball, we can kind of see the full picture here. So over the week, I'm trailing, obviously. Over the month, I'm trailing now. So yeah, just being fully transparent about this stuff. Like, yeah, there were weeks where I was up, and this is gonna be a down week given the margin, right? And that's some of the dangers you need to be okay with if you are using margin. So on 3 months, I'm above just by 0.55%. On 6 months, I'm still above by 22%, 24.2K, and year to date, up 8.54% against the S&P or 10.5K. So yeah, you can kind of see if like you track there, I was down against like when Liberation Day happened, and then as stuff has gone up and the margin has also helped, like, yeah, I've kind of been steadily beating it, which is nice. So we'll see if that keeps up unless we have like a lot of more crazy down days. But yeah, that's where the numbers at and the performance is at for the last 2 weeks. That's how it's all looking. As far as going back to Robinhood here, one quick thing that I wanted to mention was that, so I did rebuy my puts. I changed it up slightly, the strategy, and it was nice to actually see these kind of working during that dip. Like at one point during the dip, like these were up like 100% each. So I didn't end up selling them because what I want to do is that previously I was doing basically like 2 buys both for QQQ and for SPY at like 10% and 20% out of the money to protect against those kinds of dips. But then the more I was thinking about it and more I was thinking about like the price, because that was costing like anywhere between $300 and $400 a month, which felt like a lot. So I wanted to kind of reduce the price of that. So what I'm doing is I'm focusing on just a 20% out of the money put for both for QQQ and SPY, right? So I basically take the price that it is that month when I'm rolling it, and then minus 20%, and then I put it then. And so that's really just going to secure me against a really big black swan event, essentially. So like, yeah, it would have to be some crazy like 20% dip in a day or 30% for these puts to print, right? So that's why like for the tariff dip, like these were up 100%. So I'm looking more like if it goes up to like 1,000% or something for me to sell these. So yeah, it was nice to see that go into effect. But yeah, that's the protection I have in my portfolio to like, yeah, cushion the blow in case like a big dip day happens, right? It's not going to fully prevent me from losing anything, but it will cushion it at least. Not like just do a crazy dip towards a margin call, right? And yeah, one thing that's also interesting, because I think I'm on maybe a latest version of Robinhood, is that I noticed that they took out the low risk thing, which honestly thinks it makes sense because like their low risk is basically 5% and above for the margin buffer, which feels like a bit crazy and not much gradient. So now they just kind of leave it up to the person to decide. But yeah, that's the portfolio performance there. Just quickly go over some dividends as well too. So we pop over the calendar. So things, you'll have to ignore this because like given that YieldMax went weekly with a lot of its funds except the target 12. So NVDY is now weekly, MSTY is now weekly, HOOY is now weekly. So I'm going to be getting these every week now. So Snowball is still kind of ingesting a lot of this and kind of readjusting to that stuff. So like the numbers are a bit off right now. So this is showing way higher than it actually will be. But yeah, last week was a good week. I made over 2.4K between XPAY, which came in at $664 and at a 21% yield. NVDY came in strong. This was actually, I think, closer to 65 last week. So that was like $1,310 from NVDY. ULTY came in at $256, YMAX at $229. And yeah, and then this week, so now ULTY and YMAX are now paying on Thursdays, which is cool. So ULTY came in at $257 at 91% yield, which is nice. YMAX at $272 at a 73% yield. And then HOOY came in. So this HOOY's payment was like, this will be like probably the highest you'll see because this is still like, this was the week it was supposed to pay out its monthly thing. So $177, which was nice. 110% yield for that month. These will be, yeah, basically chopped in four, most likely for the following weeks. MSTY, we had like a couple of weeks paid out here, I guess, because, oh yeah, a couple of weeks, like 3 weeks worth, because there were still 2 weeks left to accumulate. So this is a bit higher. So that's why it's coming at 266%. It's not quite that. So I'm expecting this to be like, yeah, 3-4 times lower next week. And then NVDY, this is maybe a bit more representative compared since we just got the payout last week. And so that was $180. So yeah, this week a little over, 1.3K. So combined, like, 3.7K over this last week, if I'm mathing right. 2.4 plus 1.3 here. So 3.7K, which is nice. Good solid 2 weeks here. And then it'll be nice that my payments will actually even out more week to week now that NVDY and MSTY and HOOY are weekly. So, and one thing also that I want to touch on is, I was touching on this last week, but I'm still thinking about the portfolio rebalance. And I'm not making any moves yet, but just kind of mulling it over as weeks go on. And might potentially affect both the high yield and growth side, right? So if we go over to my pies over here, right? So when I look at like kind of stuff like NVDY, MSTY, HOOY, like sometimes I'm thinking like maybe I should just reinvest sell those off. Some of them, most of them I'll have to realize some gains, but overall in total returns, they're green, apart from MSTY. But I could potentially put them in ULTY or YMAX or even WPay, just to consolidate off from like the single stock ticker risk and just kind of go into the basket of funds to kind of de-risk things a bit. So we'll see whether that happens or not. I'm still mulling that over. I'm kind of thinking the same potentially even for Apple and Microsoft here. These two are like some of my longest held holdings that I've had. I've had these since like 2021. So I have a lot of gains on these. So I was thinking maybe just shaving gains off the top. So like roughly 22K of gains and maybe just putting those into QQM potentially just to kind of help just balance things out. Just because like if we pop over to the highs over here, I just have like as much single stock exposure than ETF exposure on the growth side. So maybe just to take some off the top potentially. But also what I could also do is just keep that and just keep those gains going for my Apple and Microsoft. And also just maybe invest more in QQM, VOO, and a CHD going forward over the next couple weeks or several weeks, But again, still mulling that over, but I just wanted to kind of share that in terms of thinking, because I'm still thinking that over. And then as far as my bonus allocation, I have, like, I confirmed this week, actually, I'm going to get my full bonus, which is nice. I'm still thinking about my bonus allocation between YieldTY and WPay. And honestly, so last week, like, yeah, had you caught the video before I got struck down, where what I said was that I was kind of leaning YieldTY just to kind of get that 85% that's been relatively consistent over the last several months. And that would give me a 1.06K per month boost roughly. And if I did WPay instead, which is roughly 65% that it's been paying since it started, and that would have been like an $810 boost a month to my monthly dividends. So yeah, if you calculate off this, like, imagine $800 more or $1,000 more. So that would kind of get me back into closer to the projections that I was getting as far as the where I wanted to be at for this month and next month. So yeah, we'll see. I'm still mulling it over. I have basically 2 weeks before deciding. So yeah, we'll see. Last week I was leaning YieldTY. This week I'm thinking more about it, and I'm like, maybe I do WPay now instead. Just because, like, if I do YieldTY, I'll be like very heavy into it. It'll be my biggest, pretty much my biggest fund. Outside right after XPAY essentially. And that'll be very concentrated. So yeah, if I do WPay, it would be maybe a bit more balanced. So like if I add like 15K to this, right? They would be slightly above YieldTY, but it would be a little bit better balanced that way, maybe. So I don't know. That's where I'm leaning this week. I might maybe go with WPay for the paycheck. I'm not going to put that paycheck that bonus, in growth stuff. I'm just going to focus on the yield, just because, like, I just want to get back on track for where the yield needs to be at, or was projected to be at when I first started this. So yeah, by November, I was hoping to be at 5.7, 5.8K. And right now I'm tracking at like 4.6 or 4.9. So yeah, I think, whether I do WPay or YieldTY, that should help kind of get that on track. And yeah, definitely like the diversity of like how WPay invests versus YieldTY as far as to get income, right? WPay uses leverage swap agreements, and YieldTY uses covered call income, protected puts, and things like that on very high IV stocks to generate that income. So yeah, I think it's good to just diversify too, as far as like the diversity and strategies too that I'm getting the income from. So yeah, that's that. Yeah. Again, I'm trying to use these portfolio updates to kind of let you into my thinking for all this stuff. And then as far as the finance video of the week, so this will be a slight rehash from last week for anyone that might have seen the video, but like, I discovered Margin Mindset. So actually he seems like he's rejigging his whole channel and changed his name from Dylan to Margin Mindset. So he previously had like a couple of other videos, and I spent like last week watching all of them. But yeah, now he's just reduced it to this one, and he had a great interview and talk with Recycle Your Money, which is he's been active on Instagram for the last few months, but he just started his YouTube channel, and yeah, definitely check out his as well. And yeah, it was cool to see them kind of just talk about how they've leveraged margin to really boost their portfolio over the last several years. Really, they've been investing since 2020, 2021, and they've really and they're not on crazy salaries either. Both of them are making under 100K salaries, and they've built up their portfolios to like big, like 500K portfolios. So, which is super impressive, and props to them, honestly. And like, I mean, even Margin Mindset, lives in NorCal and works as a server in the restaurant industry. So his salary's not crazy, but he's built an amazing portfolio using investing his full paycheck using margin. So definitely cool to see two guys that have been doing it for several years and being really successful at it, and even not necessarily making over 100K. So yeah, definitely two good people to follow, Margin Mindset and Recycle Your Money. Those will be linked in the description below, so make sure to give them a check. And yeah, and that's the video. Definitely a meaty one. Sorry, it went long. But as usual, like I mentioned, any of the links that I'm mentioning, Snowball, Blossom, now my new Discord server, the link is on there. You can join. Just click on there for any video that you'll see. Those will be below. And yeah, as usual, you can kind of follow me on Blossom Social. Great way to kind of just network over stocks. You can see all my trades there. These get posted as soon as I do them, which is nice. And yeah, I post my videos on there. Any thoughts about anything? So like, yeah, I talked about my WPay buy earlier this week, for example. And then also there is my Snowball Analytics portfolio. So like all the same stats I was showing you, you get all those same numbers fully transparently. Love being transparent about all this, all my real numbers, my total profits, all my holdings. So nothing's hidden, all my real values and money and gains and losses, some losses here. So yeah, give that a check. And yeah, if you got a lot of value from this portfolio update, and excited to follow that or my Paycheck Investing series, please give me a like and subscribe. Hit that bell notification to be updated on any videos. And I'll catch you on the next one. Cheers.